Welcome to the Roy Morgan Weekly Update. Finally, last week, more than a month after the federal election, the final seat result was called. Bradfield in Sydney was awarded to independent Nicolette Buller after a recount, winning by only 26 votes. The defeated Liberal Party is considering its options and may challenge the result in the Court of Disputed Returns. Now, turning to consumer sentiment, the latest ANZ Roy Morgan Consumer Confidence, based on interviews conducted last week, was virtually unchanged at 86.7, well below the benchmark 100. Consumer confidence has now averaged 86.7 for the last 3 weeks since the Reserve Bank's interest rate cut. That's below its average for the 3 weeks before the interest rate cut of 88.2. Clearly, that interest rate cut has failed to provide a boost to consumer sentiment. It's easy to understand, though, why consumer confidence has remained low, and even despite the decisive election victory. Last week's Australian GDP figures for the March quarter were released, showing quarterly growth of only 0.2% for the quarter, and just 1.3% for the full year. Both these figures represent a decline in per capita GDP growth, so the low level of consumer confidence is understandable. One brighter spot this week was the improvement in net buying sentiment, which improved by 3 percentage points. Although still low, net buying sentiment is at its highest for over 3 years since April 2022, just as the end of financial year sales kick off. An unwanted record was achieved this week, with consumer confidence now clocking up over 3 years under 90. The first time this has ever happened. The last time the index was above 90, still a number indicating a very low level of confidence, was late May 2022. During the last 3 years, consumer confidence has averaged only 81.9, more than 25 points below the long-term average since the early 1970s of 107.3. This persistent low level of confidence is the major issue for the Albanese government as it begins its second term, and the government needs to find policies to get the economy moving and increase the confidence of Australians. In some better news, ANZ Roy Morgan inflation expectations were down 0.3% to 4.7% last week. So Australians now expect inflation of 4.7% over each of the next 2 years. That's a figure in line with the long-term average of 4.8% for this measure over the last 15 years. And now, how are businesses feeling? Australian business confidence for the month of May increased by 2.9 points to 99.6, just below the neutral level of 100. The increase to business confidence came after the Albanese government's decisive re-election victory, dispelling worries about a potential hung parliament, and it also followed the suspension of many of the US President Donald Trump's high tariffs, which had hit share markets and business confidence in April. Later in the month, there was, of course, also the decision by the Reserve Bank to cut interest rates by 0.25% to 3.85%. The lowest official interest rates have been for 2 years. This Roy Morgan Business Confidence series is based on interviews with 1,500 businesses each and every month to gauge their views on their company's prospects, as well as their assessment of the broader Australian economy. And of course, the impact of the interest rate cut will be reflected in business confidence in June. And discussion about another potential interest rate cut in July should also provide positive momentum. Driving business confidence higher was more confidence about the longer-term fortunes of the Australian economy over the next 5 years. And more businesses saying in the next 12 months is a good time to invest in growing the business. That's a really critical measure. Over the 2 months of April and May, the most confident industries were accommodation and food services, which recorded a business confidence of 124.5, really above that baseline of 100. Public administration and safety was 121.4. Education and training, 118.9. Electricity, gas, water and waste services on 117.2, and rental, hiring and real estate services on 111.7, all above the national average. At the other end of the scale, we have some familiar industries, with those in agriculture, forestry and fishing on only 68, well below the national average, and transport, postal and warehousing on just 86.5. And now a look across the Tasman to the political situation in New Zealand. In May, the Roy Morgan poll shows the main governing party, National, on 31.5%, just ahead of the opposition Labor Party on 29%, both virtually unchanged on just a month ago. Mirroring the situation in Australia, both major parties are struggling to attract widespread support, and this is the 8th straight month that both parties have had less than a third of total support. There was movement in support for National's governing partners. ACT increased 3% to 12%, its highest support so far this year, while support for NZ First was down 2.5% to 6.5%. Overall, now 50% of New Zealanders support National-led government, 31.5% for National, 12% for ACT and 6.5% for New Zealand First, while 45% support the parliamentary opposition, including 29% for Labor, 11.5% for the Greens and 4.5% for the Maori Party. This is the biggest gap between the two sides of politics so far this year, although the government has still not managed to attract majority support above 50% for 6 months now. Thanks for your interest in Roy Morgan's latest results. I'll be back next week to bring you the latest results again for consumer confidence and inflation expectations and the latest unemployment figures. Thanks for listening.